This segment sponsored by Foster Financial. Welcome back to Wealth Wednesday with Foster Financial. This has been such an interesting conversation over the past few weeks as we break down the big, beautiful bill. And of course, we have our expert here, Caleb Doane, the Vice President of Foster Financial. Hello, Caleb.
Hi.
Good to see you.
Yeah, you as well.
Okay, so last time we talked about the whole no tax on tips and overtime, which was a very interesting conversation. Now we're going to talk about no tax on car interest loans.
Yeah.
Or car loan interest?
Yeah, car loan interest, yeah. Yep.
Okay, what is that? Because I have not heard of this one.
Yeah, I know this is one that maybe doesn't grab the headlines like the, big senior kind of bonus deductions and the no tax on tips and things like that. But it's something that was added to the bill. So this is for folks to be able to deduct, off of their taxes, their ordinary income taxes, any car loan interest that they paid. Obviously, there's been a lot of stuff in the news right now about how high interest rates are. Mm-hmm. Trump obviously wants interest rates to go down very quickly, but interest rates are still pretty high. And so for people who have financed new vehicles, recently, they're certainly feeling the effects of that. And so this will allow them to be able to deduct that interest up to $10,000 off of their taxes.
So I guess I'm kind of thinking about, how tax is really implemented on a car loan by itself, let alone the interest, because I guess it's something that we're just so used to being taxed so much for everything that I'm like, oh, wow, that is a separation. And so how would it apply? So when you purchase a vehicle, you're still paying everything either upfront or I guess the down payment, and then you have your payment installments. So then what happens when it comes to how you get that deduction? Yeah,
so I mean, right now, like if you make $100,000 a year, let's say, and you paid $5,000 over the course of the year in car loan interest, you would still pay taxes on that full $100,000, right? That's the amount that you earned. Now this new legislation changes that a little bit, where you'll be able to deduct some of that interest off of your ordinary income, so then you paid taxes on less money that you earned throughout the course of the year. It's of course subject to certain income limits and things like that. So I think it's $100,000 for someone as a single filer, $200,000 for someone married filing jointly, before they start to reduce your ability to write off and deduct that interest that you paid. And there's also a lot of stipulations on the type of vehicle that's being purchased.
Yes. Okay. So because of course you think about some of the major luxury vehicles and wonder if it applies. Yeah. So what are the qualified vehicles for this?
So I mean, a couple of the key things. One, it needs to be a new vehicle. So it doesn't apply to new used vehicles. Has to be purchased after December 31st of 2024. So basically 2025 and later is when the vehicle needs to be purchased. The loan was originated after that. Okay. And it has to be assembled in the United States.
Oh, so, yeah. There it is.
Yeah. So yeah, there's lots of foreign companies that still assemble their vehicles in the United States. There's a lot of domestic producers who assemble elsewhere. So it needs to be assembled, kind of final assembly in the United States, for personal use. It can be applied to a very wide range of vehicles. I think there's a weight limit. It needs to be under like 14,000 pounds, I want to say. But yeah, those are some kind of the key stipulations.
So wait, did you say new or used?
It's to new vehicles.
It's to new vehicles. Yep. Okay, got it. But you say personal use, so businesses cannot get this type of tax deduction.
Right. Businesses have like a separate deduction already for vehicles, so this is just kind of adding it to the personal side.
Interesting. Yeah. Okay, so I'm assuming, so is this list out of these qualifiers for the vehicle?
Yeah. Yep. Okay. So yeah, all those kind of lists are out for what needs to apply in order for someone to be able to deduct this interest. I'd say with a lot of the things in the bill, this is probably one of the less significant pieces that's going to impact a lot of people. Obviously, it's only for people in a certain income threshold who bought a vehicle, new vehicle this year, and who financed it. Obviously, if you didn't finance the vehicle, if you just paid outright for it, there's no loan interest that you paid at all. So then there's nothing to deduct on that.
So is this something that the car dealerships are involved in? Meaning when someone goes in to purchase a vehicle, are they educated, or should they be, to say, oh, well, you don't have to pay interest? Or is it something that they do business as usual and it's up to the consumer to make sure that they get those deductions when they actually file their taxes?
Yeah. If you're a good car salesman, you're probably going to be, adding that to the
Okay.
list of things that you'll talk about with people. And I think people can look at the VIN number on the car to actually see where it was assembled. And that's definitely going to be something where, knowledgeable consumers are going to be looking at that, especially if they're financing, to see if they get to kind of reduce the cost of the loan a little bit by being able to deduct it on their taxes.
Okay, so just like on the basic level, what is the bottom line that people will see this really impacting their finances?
Yeah. So I mean, this applies to people who are both taking the standard deduction and people who are itemizing. So even if you just take the standard, you can still use this if it applies to you.
Okay.
It's going to be relatively, modest over the course of the year. If somebody has $1,000 a month car payment, maybe a couple $100 of that, $400 or $500 at the start of the loan is the interest, and so
Right.
they'll be able to get a little deduction at the end of the year. It's not going to be groundbreaking or anything
Right.
like that, but still a dollar
It's
back in
still
your pocket
something.
is better than nothing. So,
Yeah. Well, good thing you let us know about it, Caleb.
Yeah,
Thank you.
absolutely.
And if you would like more information about Foster Financial, we'll have their phone number listed below. They do offer complimentary consultations, so you can give them a call. And I'll see you next time after the break. This segment sponsored by Foster Financial.